Thank you for joining us at xm.com for this Forex Preview video. It's going to be a very interesting week for dollar traders. CPI inflation for November is out on Tuesday, just a day before the Fed's last meeting of the year. I'm Christina Marujos. With me today is our senior investment analyst, Marios Hadjikyriacos. Recession risks loom, Marios, as leading data suggests, but this hasn't really been reflected in the official data for now. Inflation for November is likely to have cooled further, but it's still way above the Fed's 2% target. This report, of course, will be followed by retail sales on Thursday. What will these data sets tell us about the U.S. economy right now?
Hello, Christina. Quite a lot. So inflation has been the word of the year, really. It's the reason we are raising interest rates. It's the reason the dollar is so strong. And it's the reason stock markets have fallen so much. So how it evolves is obviously going to be crucial. Now, we seem to be, economically speaking, the American economy seems to be at a crossroads. So we've done all of these rate increases. We are trying to slow down the economy, but we are not quite there yet. So the forward-looking indicators, the business surveys, the housing market, consumer surveys, those are saying the economy is going to slow down next year, but we haven't really seen that in the official economic data yet. The labor market is still in good shape, the consumer is still resilient, and of course inflation is very hot. So it looks like inflation is coming down, but very relatively slowly. So this week we're going to get the latest inflation print. Inflation is expected to have cooled a little bit in November, and that is supported by business surveys. Business surveys told us that American companies raised their selling prices at the slowest pace in 2 years. With good news, it seems like inflation is finally simmering down, but it's happening because of unhealthy reasons. The companies didn't raise their selling prices because they were offering discounts to stimulate sales because demand had weakened so much. So yes, inflation is retrenching. That is also corroborated by declines in used car prices and shipping costs, but it's happening because demand is weakening, and you also have some other elements that could push back against it. So even though most of the inflation categories seem to be cooling, rents are not. So rents tend to follow what house prices have done, but with a lag of a year or so. So right now, even though most of the inflation tickets are cooling, rents are still heating up because they're playing catch up with the spike in house prices last year. So long story short, yes, inflation might cool, but probably not dramatically, and it's still going to be running very high above the Fed's goal.
And speaking of the Fed, let's turn to Wednesday's meeting. Fed Chief Powell recently said that he doesn't want the Fed to over-tighten, so a 50 basis points hike is the most likely scenario. But could we get a surprise bigger hike at Wednesday's meeting?
I doubt it. So the markets are saying there's a 10% probability for a surprisingly large rate increase. I would agree with that. It's a very minor probability. Of course, that can change if we get a hot inflation report on Tuesday. But as things stand, it's unlikely the Fed is going to do more than 50. They've communicated very clearly lately that, look, we've done all of the rate increases. Those rate increases will impact the economy in a few months. We don't want to overdo it. We don't want to over-tighten and inflict unnecessary damage on the economy. So the rate increase is probably going to be 50 basis points. And if that's the case, the markets will immediately turn to the updated interest rate projections. How high do they see interest rates going, and how long do they expect to keep them there? That, I think, is going to be the main variable. And the secondary variable will be what Chairman Powell says during his press conference. Now, overall, I would expect a relatively hawkish Fed. And the reason is, yes, inflation is coming down, but the economic data haven't really responded much yet, the official economic data, and the markets have worked against the Fed lately. Financial conditions have been loosening for 2 months. With the dollar weakening, US yields coming down, the stock market's rallying, that's counterproductive for the Fed. So if anything, I would expect them to push back against that a little bit, either through high interest rate projections or through a resolute tone during the press conference, and that might support the dollar a little bit.
And speaking of the dollar, Marios, let's turn to the market reaction. We've seen the dollar rally cooling recently, but could this week's events allow the dollar to resume its uptrend?
Here's how I would characterize the dollar, Christina. I think the outlook right here is neutral. It's difficult for me to see either massive gains or massive losses moving forward. And the reason is, even though some of the elements that drove this inflation, this dollar rally, seem to be losing their kick, so inflation is coming down, the Fed is adopting a slightly softer profile, that is negative for the dollar, but we've already seen the dollar retreat quite substantially, and at the same time, every other major economy in the world is in worse shape than America. So the Eurozone had to deal with a big energy shock and rising interest rates. That economy will likely enter a recession before the US does. It's a similar story in China with the real estate crisis and the rolling lockdowns. The Chinese economy is very weak. So even though the US-centered elements that drove the dollar rally seem to be losing their power, there's also nothing to replace the dollar in a sense. The dollar is unlikely to break down and enter a downtrend while the global economy is so weak because it's a reserve currency. So even though the rally is probably on its final legs, I think the reversal is going to be a story for late next year, and right now the outlook seems neutral to me.
Marios, thank you so much. Great having you with me today. This was a Forex Preview here at xm.com.